Hey, what's up, guys? Welcome back to the channel. So today I want to kind of pick up from one of the videos I just recently did about the stock market. Like, should you be buying? Should you be holding? Should you be selling? What should you be doing? Staying out of fear, not being afraid, staying calm, and things like that. So in this video, I just kind of want to show you an example of what it is that I'm talking about far as the market and just what I would say, what most people say, averaging down when you dollar cost average when you buy all the way down. I like to say just being consistent. So I was going to kind of show you guys why you just want to be consistent and just kind of hopefully take away the stress and any fears and any worries that someone that may have, especially if they're new in investing. Because what happens is a lot of times we get these bottleneck views of whatever's going on right now, and the market's been swinging pretty low, and then it has these high increases, and then it goes down and things like that. Some people, their emotions, especially if they're new, they have a tendency to get caught up in those things. So just kind of want to show you why you shouldn't, why you should just be calm and kind of be consistent. So here we're on Google, and I love doing these tutorials so you can kind of see how you can do and pay attention to these things yourself. And we go to Google Finance. Oh, that's interesting. Ex-Uber engineer bankrupt after $179 million ruling. Ugh. When you should have mind your own business. So let's go to Google Finance. So we go here, bam, right in front of your face. You see the Dow Jones is down over $1,000, down 3.8%. The S&P down 3.2%. Tesla's up here, 23.35% down. Down $23, down 3.12%. So you can see these are giving live updates here. So you can see it changes every so often. But let's just take a look and see exactly what's going on here. So it's in the red because it's going down. So if you're looking at the last 5 days, then you're going to see this interesting type of swing where the market has kind of retracted a little bit from its gains from over the years due to the scare of the what. and so basically here in the last 5 days, you can see the market's kind of been going up a little bit. It's kind of been going back a little bit, so that's kind of example what I'm saying. You go to a month, you see where it just kind of fell off the cliff. So during this portion here and up to this portion here, when people see these mass swings, a lot of times they get very fearful, and this is where being consistent and being calm matters the most. Because one of the things with the market is you can't time the market. So I know people who don't believe in dollar cost averaging. Basically, they don't believe that you should be buying, investing on the way down at different points. They believe you should just wait till it goes back up, or you should just run and get away from. Some people don't believe it, but see, when you're consistent, you're able to catch things as they're going on sale. Keeping in mind that it just fell from this level here. But if you were to zoom this out some, we go from 1 month to 6 months. Now it looks like, wow. You see, basically, it's not like you lost a whole lot. It's just that you lost a lot in a matter of a day or two. But this right here is the same as it was where it is now, same as where it was 6 months ago. That's it. If you go out to a year, it starts to get even more interesting. If you go out to, that's year to date. Sorry, go out to year to date. But if you go out a year, now you can kind of see where the market has been up and just an upward swing for a very long time. You go to 5 years. Now you can't even tell that there's a drop off, because over the last 5 years, it's just been crazy. So like if you were to go into Max, I really should have did this in Yahoo so I could do like some type of date range. But here you can kind of see what this looks like. And here you're seeing things like recessions. This was a pretty bad recession here, where the market went way down here. But you can see how far it's went up since then. So basically all I'm showing you is this is the overall trend of the market. If you're investing long term, you don't have anything to be worried about. If you're going to invest and not be, trading and taking your money in and out. Nothing's wrong with trading if you're a trader, but like if you're doing long-term investments, then you have nothing to be worried about. You can see this. Look at it. Isn't it amazing? Like how easy it is for the media to make you feel so worried over the span of a few days, and not realizing that things have been doing pretty well for the market as time goes on and as our economy evolves and things like that. So, if you're worried, you don't have anything to worry about. Guess when I started investing? I started investing back around here, around 2006, 2005, 2006. This is when I started investing. And in the process of me learning, man, the markets dropped tremendously. And do you want to know, till this day, some of my best investments were made here at the bottom or as this thing was going down. Like one of the examples I talked about, and maybe I'll talk about the mindset behind it. Like I bought Bank of America stock when it was $2 a share. $2 a share, guys. And now, it's like $30 a share. So it's like 15 times the price, for example. And so you can kind of see here, if you were here and you were making investments little bits by little bits on the way down, and you weren't like, taking your money in and out and stuff like that, but just making investments on the way down, and then you look to today, there's a good chance that you would have had a huge amount of return on your investments, all by keeping calm. And yes, sometimes the market dips down. You see little dips down and things like that. Oh, sorry guys. But sometimes you see those things happen, and as you can see, it just typically doesn't really matter. Short term, it matters a lot. Long term, not so much. And so let me go over to Yahoo. Let me go to Yahoo Finance, see if I can maybe just show you guys an example of like an actual stock or something like that, so you guys can kind of see, just exactly what I mean. And this is for the people who are just beginning, because people who are just beginning, they're having a lot of anxiety and kind of fearing and of just what's happening right now. Because look at the tabloids. Stock plunges 1,000 points after California declares state of emergency. These things will send people running and taking their money out of everything. So let's go and let's take a look at Amazon stock for a minute, and just kind of to give you an example. Because Amazon stock, man, I remember the price it was back then. It's crazy. Like if you guys have never seen this, you ain't gonna believe the price Amazon used to be. But right now, Amazon is a $1,900 a share stock. Yes, that's pretty expensive. But let's take a look at it back in 2006, 2008, 2009. I just want to show you guys an example of what happens with stocks and index funds and things like that, just so you can kind of see that you just don't have anything to necessarily be worried about. So here I am on Yahoo Finance, and so let's go do a date range. See this button up here, you click date range, and so let's go to 2006, and let's go to, well, let's just leave it there. Let's see what it looks like. Wow. So you see how much this is going up. So back in 2006, over here to the right, the price is right over here to the right. So in 06, Amazon was a $30 to $40 stock, and it pretty much stayed around there even through the recession. Just around $30, $40, $50. That's what it was. It was that much during that time. Like things were rough, and Amazon was here. And through time, you see, as Amazon grew, it became a different company. And no, I did not make it. That was one company I missed during that time. I didn't make any investments, if you're wondering. But you can see through time, man, from $30 through a recession all the way till now, $1,900. It's been well over $2,000 several times in the past year. So that's crazy. That's crazy. So let me just show you an example, since I brought it up, another example about Bank of America, since I brought that up. All right, so here is Bank of America, another company that I was talking about. So The date range is, around the same. So this is where Bank of America used to be. When I started investing, it was a $50 stock. During the recession, everybody and their mama said, oh my gosh, it's going to bankrupt. And, I could talk about maybe another video on how I chose to invest in something that people were talking about. It's very simple thoughts and strategies to pay attention to where I just still knew it was going to be a good investment. And as you can see here, it got all the way down. As you can see, this 2009, the recession, it's went through some upswings and some downswings, but you can see where it's went through time. It's been 35. Well, it's down based off of these last few days to now $28 or $26 or whatnot. Started at $28 a day or whatnot. So what I'm showing you is that, I understand it's a rough time, it's tough, it's things you need to pay attention to, but all means don't let fear control you. So what I'm showing you is that through time, what happens if you're investing and you see something falling and you're investing in a fund or whatever you're choosing to invest in, or you're just being pretty much consistent, your money is going to work for you in the long run, especially if it's something like a dividend stock like this is, for example. Like, not that they'd have the best dividend, but they pay out dividends. So basically what happens is through time, your money is still going to work for you. So if you're worried about your money, all I'm trying to show you is why you shouldn't be worried about your money. Yes, you should be aware, you should pay attention, but all in all, just with through time, and you've probably heard it several times before, that things are going to work out for you in the long run. Whether things bounce back after a year, or whether things bounce back, 2 years, or maybe it could be 2 months. We don't know. But, in the long run, things are going to work out for you fine. Like you can see, listen, the tabloids are here. Listen, they're telling you to be fearful. They're making you be fearful. And all I'm saying is just don't be fearful. Just let it go. Because also what the Feds did is they decided to actually lower the rates again. So they cut rates by like 0.5% or, half a point. And pretty much so basically like a few videos ago, just like a lot of people were making videos about, and so just a few videos ago, like a lot of people were making videos about your savings accounts, like where you can save money. It's a pretty much popular thing to talk about now, because what's happening is you have a lot of companies, or a lot of people, I should say, that are looking to, save their money with their tax return and things like that. And so what's happening is, along with that, you're going to see banks and places you can put your money start to drop their rates. So a week ago or 2 days ago, Wealthfront, their rate was 1.78. And the Feds have cut their rate, like I said, by 0.5 point, which is like 0.5. And so now their rates have been dropped down to 1.27. And so you're probably going to see that with some of your places you're saving that have high interest savings, especially with these ones, like these online ones, like your Robinhoods, your SoFis and things like that, like your Wealthfronts, that they might not necessarily hold your money, but there's other banks that do hold your money. They're going to be quicker to cut their rates than like, the big places like your Capital Ones and your Allies and Discover and stuff like that. They may cut their rates too, but it just, it may take them a little longer to cut their rates, or they may not cut it as bad, but they're probably going to cut their rates. So, but when you see these online ones, they cut quicker because they don't necessarily hold your money anyway. They like different banks and things like that are associated with these different accounts, and those banks are the ones holding your money. You just do it through this company or whatnot. So the Feds cutting the rates now doesn't necessarily, it can benefit you if you're looking to buy something, like far as take out a loan, because the rate drop does affect the interest rates on your loans. So if you're looking to buy something now, then great. Or if you're looking to sell something like a house, then great, because people are more apt to buy now. But then the banks, they do good because the banks, they also borrow money, and so the rates are much lower for them to borrow money than it will be from you to borrow money. So that's one of the things, and it's the goal is to try to help push along people to actually buy more. That's what their goal is. But however, when they cut the rates, it didn't work out so well. So when they cut it, the markets actually went down, which wasn't what they expected. But that's pretty much what happened when they cut the rates. So for you, if you're saving, money in a high interest savings, you're going to see the rate drop some. So per $1,000, it's like you're gonna lose like an extra $5 in interest or whatnot right now. And so like I said, they cut the rates in order to try to get people to buy more, because when you have fear happen, people don't buy as much. They only run to things like that they need. Like right now, soap and hand sanitizer is flying off the shelves. So those companies that are making money from hand soap and hand sanitizer, they're having a really good couple weeks right now. Companies that make masks, companies that make things that help to kind of fight off viruses, or like Lysol, things like that, like disinfectant wipes. So right now Clorox is probably doing pretty good, right? With what they're bringing in income wise, because people are running to those things, just as well as like thinking of things like, or people are doing things to stay from going out and stuff like that. So think about like your Netflix. So it's a down market right now, right? Things are going down, and look at Clorox. They're up right now. And if you look look at the trend. Look at the trend. Like they're holding pretty strong right now, based off of what's been going on in the market. But like think about things where people may be staying at home, like your Netflix and your Hulus and things like that. People are probably spending more time doing those things at this time. But anyways, guys, I just wanted to kind of show you guys, just take you from the bird neck view to kind of seeing things a little wider, so you can see it, especially for those that just start investing, so you can see that there's a bigger picture, and to stay focused on the bigger picture and remain consistent. So and watch with a watchful eye, use some wisdom, or whatnot, but don't make a bunch of emotional decisions, because what happens is you make a bunch of emotional decisions, or you try to do what a lot of people try to do. They try to time the market because they just know how everything's going to work, and that causes you to miss out on good investments that's going to be a blessing for you 5-10 years from now, or even 2 years from now. Like 401ks right now, markets went down. You're going to see a dip in your 401k. However, when things start to go back, you're going to see a bigger increase in your 401k, because right now you still got the same amount of money going into your 401k. And so now it's buying more of whatever funds it is that are in your 401k. And so you're pretty much buying more, like you're owning more, like you got a discount on ownership in a sense. So once it goes up, you're going to see that jump a little bit. So, but anyways, guys, just wanted to hit you guys with that quick video. And hopefully it helps one person not be, distracted and frustrated. Make sure you guys hit the like button. Make sure you subscribe and tune in for the next videos. And I'll see you guys on the next one. Peace out.